2019, one company was valued at $47 billion. It promised to change how the world works. Investors called it revolutionary. The media called it the future. And its founder believed he was doing more than building a business. He believed he was saving humanity. But just months later, that valuation collapsed. Billions of dollars vanished, careers were destroyed, and the world realized something terrifying. WeWork was never what it claimed to be. This is the story of how hype replaced reality, and how one man convinced the world to believe him. To understand WeWork, you first need to understand its founder. Adam Neumann was not an engineer, and he wasn't a real estate expert. What he had was something far more powerful: belief. Belief in himself, belief in big ideas, and an unmatched ability to sell a vision. He didn't talk like a CEO, he spoke like a prophet. And people listened. WeWork didn't sell office space. It sold a feeling, a sense of belonging, a promise that work could feel meaningful again. The offices were stylish, the community felt exclusive, and the story was irresistible. This wasn't just a company, it was a movement. At least that's what Adam Neumann wanted the world to believe. As the story grew, so did the money. Venture capital poured in, valuations skyrocketed, and no one asked the most important question. Was this actually a tech company, or just a real estate business wrapped in Silicon Valley language? As long as the numbers kept rising, nobody wanted to know the answer. Every great bubble needs fuel. For WeWork, that fuel had a name: SoftBank. Led by its founder Masayoshi Son, SoftBank wasn't just an investor, it was a believer. Son didn't just see Adam Neumann as a CEO, he saw him as a visionary capable of shaping the future of humanity. According to Adam Neumann, Masayoshi Son decided to invest billions after a single meeting, one that lasted less than 30 minutes. No deep financial analysis, no concern for losses, just belief. In Silicon Valley, this became legendary. In hindsight, it became reckless. With SoftBank's money, WeWork entered a new phase: expansion without discipline, growth without profitability. Offices opened around the world at record speed. Losses grew larger every year, but no one seemed to care. Because in the age of cheap money, growth was everything. Inside the company, the culture became strange. Parties replaced planning. Loyalty replaced accountability. Adam Neumann held absolute power. Employees didn't just work for WeWork, they believed in Adam. Questioning leadership was seen as betrayal. There were warning signs everywhere: conflicts of interest, excessive spending, private jets, expensive real estate purchases made personally by the CEO, then leased back to the company. But as long as SoftBank kept writing checks, the warnings were ignored. For years, WeWork lived in a private world. A world where valuations were negotiated behind closed doors, where optimistic projections went unchallenged, where belief mattered more than numbers. But an IPO changes everything. Going public means transparency. It means scrutiny. And most importantly, it means the story must survive reality. In August 2019, WeWork released its S-1 filing, the document required before going public. Investors expected to see a high-growth tech company. What they found instead shocked Wall Street: massive losses, no clear path to profitability, and a business model that looked dangerously fragile. In 2018 alone, WeWork lost nearly $2 billion. For every dollar it earned, it was losing even more. Unlike software companies, its costs didn't scale down. Long-term leases, expensive renovations, fixed obligations that didn't disappear when demand slowed. But the financials weren't the most disturbing part. Investors quickly noticed something else. The company was structured to benefit one person above all others. Adam Neumann controlled WeWork through supervoting shares. He could outvote every other shareholder combined. The S-1 revealed multiple conflicts of interest. Adam Neumann personally owned buildings that WeWork leased. He trademarked the word "we" and then charged his own company millions to use it. To Wall Street, this wasn't visionary leadership. It was a governance nightmare. The narrative shifted overnight. The same media that once praised WeWork now questioned everything. Headlines became brutal. Analysts were unforgiving, and suddenly the magic was gone. Investors no longer saw a movement. They saw risk. Within weeks, WeWork's valuation collapsed from $47 billion to less than 10. Potential buyers disappeared. Confidence evaporated, and the IPO was officially pulled. What was once the most anticipated public offering of the year became one of Silicon Valley's greatest embarrassments. To save the company, Adam Neumann had to go. SoftBank stepped in, forcing his resignation. But Adam didn't leave quietly. He walked away with a bailout package worth over $1 billion, while employees lost jobs and investors absorbed massive losses. When WeWork collapsed, the damage wasn't limited to shareholders and employees. The shock rippled through Silicon Valley. Investors began questioning valuations. Founders were suddenly asked harder questions, and the era of growth at any cost began to lose its shine. WeWork didn't fail in isolation. It was a symptom of something bigger. A startup bubble fueled by cheap money, blind optimism, and fear of missing out. Capital was everywhere. Discipline was nowhere. And belief became more valuable than fundamentals. Adam Neumann wasn't the first charismatic founder, and he won't be the last. History is full of leaders who sold stories before selling results. WeWork showed the danger of confusing confidence with competence, and vision with execution. In the end, the people who paid the highest price weren't the executives. They were the employees who believed, the small investors who followed the hype, and the cities left with empty buildings and broken promises. WeWork matters because it forces an uncomfortable question. How many other billion-dollar companies are built on stories rather than substance? And how many collapses are still waiting for their moment? The lesson of WeWork is simple but painful. Growth is not success, valuation is not value, and belief without accountability is dangerous. WeWork wanted to change how the world works. Instead, it changed how the world looks at startups. And perhaps that will be its true legacy. Behind every massive fortune, there is a hidden story. A story of power, risk, ambition, and sometimes illusion. This was WeWork, and this is Behind the Billions.